4 centuries, alchemists promised and failed to turn lead into gold. What's most astounding about all of this is that even after each debunking, these charlatans would repackage their discredited schemes as something new with fresh jargon and different salesmen, luring wave after wave of hopeful dupes eager for golden miracles. Instead of promising to turn lead into gold, today's alchemist-in-chief, Mark Carney, promises to turn deficits into investment, an old Trudeau Liberal promise repackaged as a fresh idea with shiny new slogans like spend less and invest more. Sounds more sophisticated, but it's really not that different than the budget will balance itself, which was Justin Trudeau's way of promising that deficits would fund investments, sparking economic growth and tax revenues for, well, the budget to balance itself. As you can see, this rhetorical trick of calling spending investment is an old one for the Liberals indeed. Have a listen.
To spend, spend, spend. To invest, invest, invest.
Liberals re-upped this promise in grandiose terms after COVID, promising a great reset where they would revolutionize and modernize our economy with billions in debt-fueled, quote, investment. As you can hear from Mr. Trudeau himself.
This pandemic has provided an opportunity for a reset.
So given that the promise has been used and reused for 10 years, what's the result? Well, the debt doubled, investment dropped, growth halted, and the budget, well, it didn't balance itself. Since the Liberal deficit binge began 10 years ago, real investment per worker in Canada has actually dropped by over 10%, the steepest decline in the G7 and in Canadian history. Canada's also posted the G7's weakest per capita GDP growth. If we take total investment in the country and divide it by the number of workers, you can see how Canada stacks up. Measured in American dollars, in 2024, investment per worker in Canada was $15,600, barely half the $28,600 in the US, and 1/3 the $23,600 in the OECD. So as you can see from this illustration, Canadian investment per worker was half of what it was in the States and 1/3 less in the OECD. So why did deficits fail to produce investments? First, everything comes from something. Nothing comes from nothing. So where do deficit dollars come from? Only 2 places. Governments can print it or borrow it. If they print it, they cause inflation. And if they borrow it, they sponge up scarce funds that investors cannot invest elsewhere. So every deficit dollar the government puts into the economy, it must first borrow out of the economy. You can see it through this illustration. Right here, you see that this bank icon is lending to the farmer, to the trucker, and to the factory owner. But when the government starts borrowing the money, it moves in the other direction, meaning that the scarce supply of credit is now flowing to government instead of to productive industry. Hence, running deficits does not actually add any net economic activity. It only shifts it towards unproductive government spending away from productive investment in factories, pipelines, warehouses, tech research, and other income-generating assets. And you can notice here in the illustration as well that the Parliament icon, which represents government, it's getting bigger because the money is cycling through the government and being sopped up by the bureaucracy. And the industrial side, the farmer, the trucker, the factory owner, that's getting smaller because the money that is finally trickling back is smaller in size. So economists call this the crowding out effect. Case in point was in the 1990s, massive Israeli deficits had been forcing government to offer 6% interest on bonds, luring pension and insurance funds to invest solely in guaranteed government securities. Now, private investment stalled. But as the book Startup Nation, the story of Israel's economic miracle demonstrated, when Israel slashed its deficits and stopped selling bonds, investors had no choice but to redirect their investment to inventive new businesses, sparking a venture capital boom that gave the tiny country of about 10 million people the world's highest density of startups and more NASDAQ-listed companies than all of Europe combined. And that's a continent with 75 times more people. The second reason why deficits don't produce investment is today's deficits are tomorrow's taxes. So when businesses and people see massive government deficits, they cut back on their spending and investment to prepare for the future tax hikes they know that they will shoulder. It's called the Ricardian equivalence. Economists like Roberto Perotti and Valerie Ramy found that in advanced economies, including Canada, deficits often led to reduced private investment. In a 2019 IMF study further confirmed that a high-debt country like Canada with big deficits often prompt households to hoard more and invest less. In other words, offsetting any potential stimulus for the economy. What we need is productive private sector investment to make our costs lower and our paychecks bigger. Here's why investments matter. Imagine if there are two men competing in the snow shoveling business, one American, one Canadian. Both start with a shovel. After the first year, the American gets enough investment to buy a snowblower. The Canadian gets enough to buy a bigger shovel. After the second year, the American gets enough investment for a big snowplow on the front of a big old truck. The Canadian finally scrapes up enough investment for a bigger snowblower. The guy with the snowplow, the American, can shovel a lot more snow at a much lower price. Because he clears more laneways, he makes more money and has a bigger paycheck. And ironically, because it takes him less time, he doesn't have to charge each separate customer as much, so he makes more and they pay less. On the other side, the guy who's still using the snowblower, he has to charge more because it takes him more time to do the work and he ultimately makes less money. His customers pay more, he makes less. No wonder we in Canada are making less today. Because Canada's investment per worker is half of what it is in the States, we have to work harder and harder for less and less. What we make depends on, well, what we make. Economists call this productivity. It's a big fancy word for something really simple. Productivity is the amount of income generated per hour worked. Here's the formula. GDP divided by the total number of hours worked in the economy each year. And measured in US dollars, Canada has a productivity per hour of $75. In the US, it's $97, a third higher. In other words, in less time, the American worker can make a lot more money. Now, Carney would tell you that government can borrow money out of the private sector and invest it in big state-directed economic projects that will produce higher returns. But that prompts two questions. If economic projects are viable, why does the government need to fund them? And if they're not viable, why would the government want to fund them? Now, roads and highways are an exception, for example, as they're projects that need some government funding because there's really no direct way for them to fund themselves. But Liberals have a nasty habit of funding big corporate projects that normally would be private sector funded, and they end up losing a ton of money and a ton of jobs. Projects that lose us money make us poorer. Mega projects that lose money actually make us a lot poorer. The Liberal logic is that a businessman who loses money on every sale should try to make it up on volume. But of course, that's just a really fast way to get really poor. The only reason why money-making projects funded by the private sector don't happen in Canada is because government won't get out of the way and let them happen. We have the second slowest building permits anywhere in the OECD and among the highest taxes of any country in the developed world when it comes to investment. The government needs only to do one thing to unlock the trillions of dollars of investment that businesses would love to put to work in our economy. The government needs to get out of the way. Get out of the way by granting the fastest building permits in the world. Get out of the way and end capital gains tax on reinvestments. Get out of the way and repeal anti-resource laws and bans on shipping oil off BC's north coast. End the oil and gas production cap. Get out of the way. Let builders build, workers work, and business boom. With the most resources of any country in the world, we don't need liberal alchemists to promise yet again to turn deficits into investment or lead into gold. We need them to get out of the way and let Canadians start digging the gold mine that's right under our feet.